Welcome to the channel Get Rich. Today the company we are going to analyze is L&T Infotech Limited. So before going into the company, let's have a look at the industry itself. So the global IT BPM market excluding hardware and ER&D grew 5.6% over last year and stood at USD 1.5 trillion in commercial year 19. Indian IT BPM industry revenues, including hardware and ER&D spend, stood at $191 billion in financial year 20. The industry added $14 billion in incremental revenues last year, representing year-on-year growth of 7.7% in USD terms. IT BPM export revenues for the industry for financial year 2020 are expected to reach $147 billion growth of 8.1% over the past year. So the share of digital in industry revenues has jumped from 20% last year to now in the range of 26 to 28%. So out of the total revenue, 26 to 28% are coming from digital. There are 9 digital technology areas will emerge as fastest growing and highest impacting, with a combined potential to deliver one third of the $100 billion. The 9 areas include 3 foundational technologies: big data and analytics, cloud computing and cybersecurity, and 6 advanced technologies: artificial intelligence, Internet of Things, 3D printing, robotics, blockchain, and immersive media. So these are the main areas which are going to boom. Then let's have a look at L&T Infotech as a company. So L&T Infotech is a global technology consulting and digital solutions company helping more than 420 clients succeed in a converging world. With operations in 32 countries, they go the extra mile for their clients and accelerate their digital transformations with their LTI Mosaic platform, enabling their mobile, social, analytics, IoT, and cloud journeys. So, founded in 1997 as a subsidiary of Larsen and Toubro Limited, their unique heritage gives the real world expertise to solve the most complex problems. So they have Mosaic and Lenny. Their offerings for the entire data to decision cycle are better equipped with automations and artificial intelligence capabilities to address the needs of breakaway enterprises. So if you have a look at their headcount, they have 32,000 people working in their company, and their revenue is more than $1.6 billion, and 68 Fortune Global 500 companies they have as their clients, and they have 400 plus active clients, and they are the sixth largest Indian IT services company, and they have 34 delivery centers globally with 57 sales offices. Let's have a look into their business sectors. So what are the business sectors they are operating in? So their main big business sector is banking and finance services a sector. So they have around 29.3% of their revenues is coming from this particular sector. So if you have a look at 2019 to 2020, so they have 29.3% in 2019, and currently in 2020 they have 27.6% of their revenue is coming from banking and financial service sector. And then comes the insurance sector. So they have 17.9% in financial 2019, and 17.8% of their revenues is coming from insurance industry in financial year 2020. And they have manufacturing at 15.8% of revenue is coming from manufacturing sector in financial 2019, and in financial 2020 it increased to 16.8%. And the next comes energy and utilities. They have 10.7% in financial 2019, it increased to 11.4% in financial 2020. And they also have CPG, retail and pharma, which increased from 10.2% to 11.3%. And then they have high tech and ME, which decreased from 11.6% to 11.2%. And they also have other business which accounts for almost 3.9% in financial 2020. So if you look at the performance of their verticals in banking, finance and services sector, so they have 8.4% quarter over quarter growth, which was strong in top client as well as some of the new logos added in recently. So the growth in banking and finance sector is driven by core infra like accounting, reporting and governance, payment utilities, platforms to support retail, wealth, public cloud. So LTI launched digital banking platform in Nordics region in partnership with Temenos. So the next one comes the insurance industry, which degrew by 0.6% quarter over quarter. So this vertical declined marginally. COVID related commercial concessions have tapered down in third quarter, and recovery is expected in coming quarters. And then in manufacturing sector, so it grew 9.6% quarter over quarter, and H2 is stronger for this vertical with due to higher revenues coming from one of the India engagements. ENU was flat 0.1%, and then management remains cautious in the sector. So the revenues are expected to ramp up from new large deal win in quarter 1 financial 2022. So also we can break down these revenues by services as well. So the first comes the AEG services, which is at 39.5% in 2019, and it decreased to 36.1% in 2020. And they have enterprise solutions, which is 29.2% in financial 2020. And then they have infrastructure services and security, which accounts for 11.6%. And then analytics, AI, and cognitive, which accounts for 11.8%. And then enterprise integration and mobility, which is 8.6%, and then products and platforms, which is 2.8%. So if we discuss in terms of service lines, their growth was led by enterprise solutions, which increased by 7.9%, and next generation services such as analytics, AI, and cognitive, which grew by 18.6% quarter over quarter, and their enterprise integration and mobility, which grew by 11.8% quarter over quarter. So both these next generation service lines contributed to 53% of incremental revenue. So they are doing pretty good. And then if you look at their main growth, where it is coming from, which is coming from BFSI sector. So their entire growth almost mimics their BFSI revenue growth. So this sector is very important for the company. And then let's have a look at their digital revenues. So if you have a look at their digital revenues in financial 2017, 26.3% of their total revenue comes from digital. It increased to 32% in financial 2018, and it increased to almost 40.3% in financial 2020. So their digital revenues are increasing. Also, if you have a look at their quarterly digital revenue, it is increasing consistently. So currently they have 43% of their revenues are coming from digital revenues. So that's a pretty good thing. They are riding the wave of current digital trend. So that's a good thing for the company. Let's have a look at their geographical mix. From which area or from which place their revenues are coming from, or how much revenues are coming from which area. For them, the most important is North America. So almost 69% of their revenue is coming from North America in financial 2019 to 20, and financial 18 to 19 it was 66.8%. So from North America they have almost 69% of their revenues coming from North America. And next one is Europe. 57.7% of their revenue is coming from Europe. And then India, they have almost 7.1% of their revenues is coming from India. And then Asia Pacific is 2.8%, and rest of the world is 5.4%. So most of their revenues are coming from North America and Europe. If you have a look at their client metrics or the client concentration, so how much their top 5 or 10 or 20 clients contribute there to their revenues. So if you have a look at the top 5 clients, 34.8% of the revenue is coming from top 5 clients. So it was decreasing from financial 2019 to 20 from 34.8% to 31.8%. That's good thing because they are diversifying their top 5 clients. And then if you have a look at the top 10 clients, almost 48.5% of their revenues are coming from their top 10 clients, which is decreasing from 48.5% to 45.3%, which is also a good thing. And if you compare top 20 clients, it decreased from 64.8% share to 61.1% share. So that's a good thing. They are diversifying their top clients. If you look at their client metrics, which is the total customers, the total customers is increasing from 261 in financial 2017 to almost 424 in financial 2020. So they are adding new customers and also retaining existing customers. So that's a very good thing. Also, if you have a look at their $1 million plus clients, for example, their $50 million plus clients, they have 6 clients, and $20 million plus they have 16, and $10 million plus they have 32 clients, and $5 million plus they have 61 clients, and it is also increasing. That's also a good news. And then if we have a look at their biggest customers, so $100 million plus client, they have a US based global bank which gives their big business of almost $100 million plus, and then $50 million plus they have large PNC insurer, professional services giant, and they have some global ONG major, and they also have $20 million plus clients like Nordic Bank, Global Tech Giant, CPC Giant, and big M&E company, and also $10 million plus clients like US former major French utility company, a US energy company, global CPG player, and $5 million clients. They have a lot of $5 million plus clients, so they have large manufacturer, US based M&E company, European bank. So they have a lot of customers who doing business $5 million plus. So, and then if you have a look at their key deal wins, so they have many deal wins this year. They have like from key government ministry, they have wealth management firm, they have large energy retail company, smart energy storage solution provider. So especially in the current quarter, L&T Infotech won two large deals during this quarter. So the main deal is Insajat with a deal value of $204 million, which is in high tech vertical, and a Fortune 500 energy client with new TCV value of $74 million. So revenue from both these deals is expected to reflect from quarter one financial 2022. So in the case of Injazat, the deal is for multiple areas: journey to cloud, best shoring, and ERP modernization. The deal is currently in the transition period and would see a major pickup from the next quarter. And they also have many deal wins, as I said. So a UAE based leader in digital transformation has selected LTI as its partner of choice to provide infrastructure and application operation support and maintenance for its existing and new customers. So as part of the deal, LTI will also partner with end customers on their journey to cloud and transform operations to bring in best shoring and automation. A global Fortune 500 energy company has chosen LTI as its primary partner for an application managed services agreement to create and consolidate business aligned IT services delivery platform across the organization and reduce total cost of ownership. And also a company located in the US providing leading data driven marketing, loyalty, and payment solutions has selected LTI for customer centric digital transformation initiatives. And then if we see, they also executed a license sale agreement for AI decisions and catalog products on its Mosaic platform with a multinational banking and financial services company to bring about efficiency in their reporting with the regulators. Mosaic will serve as a unified data analytics platform, enabling consolidation of all credit risk models, and will be hosted in a hybrid cloud setup. As a part of the deal, LTI will be a one stop shop providing the product as well as handling, deploying, integrating, and testing services. That's a good thing. They also have winning a lot of deals, and they are also doing a leading European financial services firm has chosen LTI to manage its infrastructure operations through a linear operation model and by leveraging the Mosaic platform to drive automation. Recently, they launched Canvas Polar Sled. This is an automated cloud migration and modernization framework to help enterprises accelerate their data move to cloud with Snowflake. A global hatchback manufacturer has selected LTI to rationalize and migrate its application landscape to cloud. So they have a lot of deal wins this year. So that's a very good thing for the company. And then if you have a look at the employee metrics, so the employee count is constantly increasing from 21,000 to almost 31,400 in financial 2020. Their headcount is increasing, and the utilization, if you look at the utilization including trainees, it was 80.6% in financial 2019, and it reduced to 79.5% in financial 2020, and in quarter 2 financial 2021 it again increased to 80.5%. Excluding trainees, it was 82% in quarter 2 financial 2021. If you have a look at the onshore and offshore mix by effort, so which is 22.3% on-site and 77.7% offshore in financial 2019, and in financial 2020 it was 21.8% on-site and 78.2% offshore. And if you look at the revenue mix, almost 49.6% is on-site in financial 2020, and offshore is 50.4% by revenues. So that's also a quite good thing. And then if you look at some of their acquisitions, so during the calendar year 2019, LTA acquired four great companies, each expanding their expertise in their chosen areas of growth. So PowerUp Cloud Technologies enhances their cloud consulting capabilities. Nielsen Plus Partner boosts their Temenos footprint. Rule Electronics makes their Pega consulting and implementation capabilities robust, and Limbach enhances their analytical capabilities with its virtual assistant Lenny. These capabilities with their Mosaic platform strengthen them to be the chosen partner for Breakaway Enterprise. To further augment their digital capabilities, LTI announced two acquisitions in financial 2020. In July 2019, it acquired Limbach, a specialist in AI, machine learning, and advanced analytics, The Limpec acquisition adds to LTI's Mosaic platform offering. They are also acquired PowerUp, a born-in cloud company with cloud consulting capabilities across all three cloud platforms: AWS, Microsoft Azure, and Google Cloud. In addition to cloud consulting capabilities, PowerUp also adds two AI products to LTI powerful suite of offerings. Let's have a look at their products and services. So they have many products based on the type of enterprise. So they have Lenny, their virtual assistant, supports the working capital management needs of clients through solutions designs to help in spend analytics and inventory mapping. They have cloud cost optimization. So they also have more from core. So they are also having intelligent automation, and they are also have cognitive care, mosaic automation, and wearable AR VR technologies. They are also having expertise, and also it depends on other types of enterprises. They also have bolster.ai. They also have integrated emergency workforce management. They are also developing everything from home. That's also some of the offering they are providing to their customers. They also in supply chain operate to transform and intelligent automation. So they have a lot of products and services. So that's a pretty good thing. They have wide variety of products and services, and they are working in future technologies. That's a very good thing. And then if you have a look at financials, so their financial annual revenues, so how their annual revenues in USD terms pan out and what was the growth. So they were growing 16.7% in financial 2018, and financial 2019 it's 19.1%. In financial 2020 it was 13% growth. And then quarterly revenues, they are also growing. So year over year 10.8%, and then 13.7%, 15.9%, 9.5%, 11.2%. Quarter over quarter also they are growing. So they are doing a pretty good job in the past years. So and then if you have a look at their EBITDA margin, it is consistently increasing. So it was 19.6% in quarter one financial year 17, and then in last quarter it was almost 23.2%. So they are consistently increasing their margins. That's a very good thing. So their profitability is increasing. And then if you have a look at their revenue in INR terms, it's also increasing. That's a very good thing. And EBIT, it's also increasing. You can see 18.4%, 16.1%, and 17.6%. And then if you look at the net profit, and you have the net profit almost 1500 crores in financial 2019, and financial 2020 it was almost 1520 crores. That's also a good thing. Then if you have a look at their financial statement, in March 2012 they have a net profit of 419 crores, and currently they are sitting at 1520 crores. That's a pretty huge growth. If you look at the sales CAGR, it was 17% CAGR for the past 5 years, 19% for the past 3 years. If you look at their profit growth, it was 15% for the past 5 years and 17% for the past 3 years. They are doing pretty good growth. If you have a look at their dividend per share, they are consistently increasing their dividend per share. So it was 16.6 rupees in financial 2017, and in financial 2020 it was 28 rupees. They are also increasing their dividend. That's also a pretty good news. And then let's have a look at their balance sheet as well. So their balance sheet in March 2012 it was 2089 crores, and it increased to 8815 crores. Almost they have reserves of 5387 crores. So they almost have no debt at all, and they have a lot of investments. That's a pretty good thing. And look at their return on equity. It was 34% return on equity for the past 5 years, and then for the past 3 years it was 32%. Last year it was 30%. It's very good. I like companies having return on equity more than 15%. So they are having a superior return on equity. That's a very good thing. I like this company. They have a lot of fundamentals, pretty good fundamentals. They are doing phenomenally well. If you have a look at the cash flow statement, so if you look at their operating cash flow, their operating cash flow is increasing. And also if you look at their operating cash flow as a percentage of PAT, it was almost 120, it was almost 120.5% in financial 2017, and 76% in financial 2018, and 92% in financial 2019, and 108% in financial 2020. So that's a good thing. They are having a pretty good cash flow. That's a pretty good thing. And then if you have a look at the shareholding pattern, so 74.3% is from promoters. And if you look at the historical promoter holding, it was almost the same. It marginally decreased, but it's almost the same. And if you look at the FIA holding, it was increasing quarter over quarter. The FIA holding is increasing, but the negative thing is the DII, or the mutual fund holding, is decreasing quarter over quarter. Especially in December quarter it decreased a lot. And then if you look at their mutual fund, whether they are buying or selling for the past months. If you look at the past 3 months, in October 2020, almost 4,84,677 shares are sold or get out from mutual funds, and in November 2020 they are selling, December 2020 they are selling heavy. So mutual funds are getting out of this company during the past months, mainly because of valuation, I feel. Let's go into detail in valuation in some time. And then if you look at their some of the largest funds which holds LTA, so which is a UTA equity fund, HDFC Midcap Opportunities, Aditya Birla, and then ICICI, Mirai Asset, UTI. So there are a lot of funds which are holding shares in LTA. And if you look at the last monthly change in shares, most of them sold. So look at the decrease, it was 36.7% decrease from HDFC Midcap Opportunity funds, and then Mirai Asset they have 19.38% decrease, and then ICICI Prudential they have 10.2% decrease. So there are mutual funds which are getting out of this company. So then if you have a look at the valuation of the company, look at the valuation. The price increased from almost 1000 rupees to 4300 rupees. 1000 rupees in November 2017 and almost 4200 currently. So look at the growth, it almost went up 3 to 4x in just 3 years or so. Even if you look at here, in May it was almost at 1200 and currently it was sitting at 4000 rupees. So it the stock ran up quite a lot in the past months, so beware of the valuation. So we have to look into the current valuation because it was undervalued in the past several months. But then currently if you have a look at the current situation, so let's have a look at the current situation or the historical PE. So in July 2016 or in to October or December 2017, their PE sits around 10, and then it increased to 23 in September 2018, and it was staying almost between 15 to 20 until April 2020, and it shot up almost to 40 PE currently. Now currently it is trading at around 38 to 40 PE. I feel it's expensive, though it have a very huge fundamentals. Their return on equity is pretty good and their growth story is very good. They are growing, they are going to grow at 25% CAGR for the next 3-4 years, but still I feel they are a bit expensive to enter at this point. But if you have a long term view, that's good thing. If you have a long term view of this company, you can still enter at this price, but then you have to be cautious to get a very good entry point. Let's have a look at their revenue. So in financial 2016 they have 5846 crores, and financial 2020 it increased to 10879 crores. I expect them to do 12837 crores in financial 2021, and financial 2022 15405 crores, financial 2023 18794 crores, with the price increase of 18% in financial 2021, 20% in financial 2022, and 22% increase in financial 2023. And the net profit increased from 836 crores in financial 2016 to almost 1520 crores in financial 2020. I expect them to do 1839 crores in financial 2021, 2262 crores in financial 2022, and 2828 crores in financial 2023, with a price with a net profit growth of 21% in 2021, 23% in 2022, and 25% in 2023. So then if you have to do a price target with the current valuation, with this PE 38, for 1 year is 3994 rupees, 2 year it's 4912 rupees, 3 year 6140 rupees, with the price cumulative growth of 1% for 1 year, 24% for 2 year, and 55% for 3 year. But then I feel the current price is bit overvalued, so I feel it is going to correct, or I don't know, but personally I feel the PE should come down or their earnings should go up pretty huge. So according to me, the reasonable PE can be 26 to 28, but I am valuing at 30, which is not conservative. I am optimistic with the PE of 30. The conservative PE would be 26 to 28, but I am estimating the price target with the 30 PE, so which is 3153 rupees for 1 year, 3878 rupees for 2 year, 4848 rupees for 3 year, with a price cumulative growth or decrease in 20% for 1 year, 2% for 2 year, and 22% increase for 3 year. So it all depends on the growth. So I feel currently the company is a bit overvalued because it went up so huge. So personally I am putting this company into my watch list, and if the price corrects back to, for example, 2500 or 3000, I will be buying heavily. I am very much interested in this particular stock, but the current valuation is a bit overvalued. So at the current price I will not enter in this stock. If you already own this stock and you can continue to hold, but yeah, if you want to buy this stock with a long term view of 10 years or more, yeah, you can still enter at the current price, or you can do dollar cost averaging. So personally, what I am doing is I am putting this company in my watch list, and I am looking for the price to correct to have a potential entry point. Also, the disclaimer: I am not a financial advisor. This is my personal opinion, and you have to do your due diligence before investing in any stock. So, that's all for today. Thank you for watching and have a nice day. If you like this video, like, share, and comment. So, thank you. Thank you for watching. Bye bye.